just fucking. Sorry, guys. I literally just woke up. That's why I look like this. I literally wanted to get on here and I wanted to show you guys a tip that I think that would help your trading. And I think I want to just show you guys, yeah, what I'm referring to. So basically, what I want you guys to do is, or what I want to show you is what my whole plan is on this trade here on Euro USD. So on Euro USD, my plan overall is to long. Sorry, why is it so laggy? Jesus, is to long it because market structure overall, and I have market structure on a higher time frame, which is my confluence and other things that's telling me to buy. Now, when you're buying, they say to buy in dips and sell high, buy low, and that's what I'm doing. And if you notice, price is currently still at the top of the range, near our current high, which is over here, that purple line. I'm waiting for price to drop, and so that is a major reason why I'm selling right now. And I'm not selling for the long term. I'm selling for it. I'm selling on the way down to my entry because the bottom of the range is where prices are cheaper, and then the higher price went, it created the volatility. It created the gap, which you're looking at on that white candle below there on the bottom of the range, which is why euro is dropping right now. And so I'm basically, sorry it's so laggy, I'm selling it to that point. And yeah, so right now I'm on the, if we go back to the 3-minute chart, we can see how it's like it's sloping down here. We have market structure, lower highs, lower lows, and yeah. So basically, the whole concept is when you're trading and in your when you have your market structure down, like you said, if your market structure is bearish, that means you're selling high, which means that you want to wait for price to actually, not only price but your entries along with price, to be at the top of the range. And if you're buying, you want to buy low where prices are cheaper. It just makes sense like way, because you invest, you want to invest when at early, which is when price is cheaper. And then, so right now price is dropping from a high point, um, which is the area down, or the area where it's dropping to is where I want to buy. So I'm waiting for it to drop down for prices to get cheaper, and I'm just basically selling on the way down. Now you don't have to do this. Like look what it's doing right now. Right now, it's actually dropping right now, and you don't actually have to do this all the time. You can just do this whenever you're trading and um, you notice that it is in fact dropping, especially because I had Euro news this morning at around 4 during London session. It's still 8, so London is still overlapping New York section. Like right now, you can see all the candlesticks going downwards and shit. But yeah, guys, yeah, it's going down, it's dropping, price is dropping. And you can even turn the volume on, but I usually keep the volume off. You can see how the volume, it even says in the volume, if you look at the volume chart right now, how the red is towering upwards, how the red is increasing, which means the selling volume is increasing. And if you notice, the ones who, since we're trading smart money, the ones who control the market are the bigger candles, because it's filled with more capital. The bigger the candle, the bigger the movement. And so the more volume we have, volume shows who's in control of the market. So low volume rejects, you can write that down. Volume shows who's in control of the market. Low volume rejects, low volume accepts. Low volume rejects, high volume accepts. Low volume rejects, high volume accepts. And so what that means is when we're trading smart money concepts, we want to trade the volatility. We want to go on the side where there's high volume, which is in this case the red volume, because right now we're in a bearish market right now in the short term. So I wouldn't want to be buying in the bearish market. So we're following volume. We're following the flow. So volume is like you're following the flow. It's like the river where the market's going. It's direction. It's showing you direction. It's basically essentially the rocket fuel. Also, it's a metaphor. The rocket fuel that fuels the candlesticks. But yeah, guys, I didn't want to make this video too long, But I wanted to show you guys this because I just thought it was cool. I don't really know why it's doing the lag shit. Um, it's probably doing that because of the Wi-Fi or something. I gotta take a look at that, but it'll get better. So yeah, guys. So yeah, so that's a tip. Number one thing when you're looking for a trade setup is your market structure, and number one thing you're looking for in a trade setup is your market structure, and number two is once you identify your market structure, you want to actually determine your what you're even doing. So, sorry, before your market structure, you want to look at it and see if you're in a bearish or bullish trend. And then you write, okay, so if you look at it obviously and you see it going down, you know in your head intuitively that's a bearish trend. Then you want to write your market structure. And then after you write your market structure, so let's say your market structure is bearish. That means that, okay, so I'm selling to make money in the forex market today. So what you want to be doing is, if you're selling, you want to make sure your entries are at the top of your most recent high when you're drawing that structure. So when you're drawing the lines of your highs and lows, like if you watch my other videos, you want to actually be selling when price actually rises to the top. When price rises to the top of your range, that's where you want to be selling, because the whole point of a range, like if you're watching my videos, I trade with the news. So the news, I trade medium and high impact news. So when there's medium and high impact forex news, that creates volatility and that creates actual movement in the market. Because if I trade normal yellow news, which is low impact, the market moves in these little movements. But we need, when we're trading smart money, we need the market to move aggressively upwards and downwards in the market. And this is from a weekly to a monthly basis. So when there's sell news in the market, let's say the red news, there's high euro news, and that high impact euro news, and that which affects the market, and you see euro drop down crazy or something, we need that to trade our setups, because when we trade those setups, it moves the most. And also we have a higher probability because we have tighter stop losses, and there's no there's no drawdown, there's low drawdown, and so it's just easier to trade that way. And so the main trade setups I trade are imbalance gaps. That's the name of the type. They're similar to fair value gaps but different. And I also trade order blocks, which basically are areas where smart money injects large sums of capital into the market. So if you look at the bottom of a dip, you'll see sometimes a bullish order block, which looks like an engulfing candle, a green candle engulfing the red candle, or a white candle engulfing, whatever color your candlesticks are. But yeah, guys, I just wanted to go over this, and I'm really interested in it and everything, so I wanted to just make this video. It's kind of sloppy, but I don't really care. So the whole point is, number one, the first step is look at the news. Go on Forex Factory, set the settings to only show you red news and yellow news. Sorry, red news and orange news. High impact and medium impact. Step number two is, once you know the currencies that are actually moving, this is just to tell you what's moving so we can make money. So once you know that it's moving, the other step you're going to do is you're going to go look, okay, so if euro is moving, let's say Monday or Tuesday, you're going to go on the chart, and then you're going to go and look up the euro USD. You're going to choose the pairs you want to trade. And then once you do that, then let's say euro USD is moving and you see the market structure is moving bearish, and you see there's high volume in the bearish sentiment. You see this high volume bearish movement. What you're going to do is that what's probably going to happen is the news is either going to be a continuation or a reversal. So if what happens is, if you're trading before the news, you can trade before the news or after the news. I like trading usually, it depends on the session. If I'm trading the London session, I'll usually trade before the news, usually, because it usually will happen early, and sometimes I'll be awake before the London news happens. Or if you're trading New York session, you can trade actually after the news, so after 8 or 7 and blah blah, or before. It really depends on if you see a clean setup. So if you see the setups that I trade before the news, of course you can trade it. And some people don't like trading before the news because they say it's dangerous, obviously, because the market movement, how it reacts aggressively. But if you're trading with the market and you're finding earlier entries, the news should actually be pushing your trade into profit. It should be you should be trading with the news. Like your trade setup should align with where the news is going, essentially, because our technical analysis and fundamentals should align. And yeah, guys, so yeah, that's the steps. Just news, market structure, range, which is am I selling or am I buying? So if I'm selling high. If I'm buying low. Your range, and then your POI. POI stands for points of interest. These points of interest are basically areas of interest that we're interested in taking trades in to make money. And so these points of interest are basically essentially the two trade setups that I trade, which are order blocks and imbalance gaps. Those trade setups are basically my POIs and what I look forward to enter off of, and I also look for areas to reverse off of those, because my entries are all off of the order blocks and imbalance gaps are usually reversals. So my entries a lot of the times are doji candles. So a lot of the times my entries will just be a tap. The doji candle will tap the block and go immediately and react off of that. There is no drawdown. A lot of people will trade and there'll be the price will hang it in their stop loss, but a lot of times when we trade, when people trade SMC concepts, you'll see their trades just hit and go because we're trading at precise levels. And yeah, that's why we have minimum drawdown. And so when you're trading these order blocks and stuff, you can either wait for price to react off of it and then trade if you're kind of a beginner, or if you're really confident and you're good at identifying these types of setups, then you can trade immediately. But that's just basically what I wanted to show you guys. And yeah, guys, so if you guys like the video, let me know. I'm gonna wait and see how this trade ends up, and I'm gonna post it on my Instagram. And I hope you guys enjoyed it. Oh, it's been 12 minutes now. But yeah, guys, I hope you guys liked the video, and I'm gonna keep making more, definitely. I haven't made some in a while, but yeah, guys, I just wanted to make a little quick video, and I hope you guys got value out of this. I know sometimes I stutter, my ADHD and all that shit, but yeah, guys, go ahead and rewind the video if you need to, take some notes, and yeah, guys, I'll make some more later. Peace.